Are you interested in investing in the stock market but need help knowing where to start? Mutual and exchange traded funds, or ETFs, are great options for beginners. In this video, we'll guide you through the basics of investing in mutual funds and ETFs and show you how they can help grow your wealth. Mutual funds and ETFs are investment vehicles that pool money from multiple investors to buy a diversified portfolio of stocks, bonds, or other assets. This exposes investors to a broad range of securities without having to select individual stocks themselves. Mutual funds and ETFs are easy to buy and sell, offering a range of benefits, including diversification and professional management. Let's take a look at an example. If you had invested $10,000 in a mutual fund that tracks the S&P 500 in 2011 and held it for 10 years, your investment would have grown to around $27,000. That's a 170% return. Various types of mutual funds and ETFs exist, such as equity, fixed income, and hybrid funds. Equity funds invest in stocks, fixed income funds invest in bonds, and hybrid funds invest in both. Fixed income funds typically have lower risk and lower returns than equity funds. In contrast, hybrid funds offer a mix of both. Next, we'll consider essential factors when investing in these funds. The expense ratio is a vital factor to consider when investing in these types of funds. The expense ratio is the annual fee charged by the fund to cover its operating expenses. Expense ratios vary widely between different funds, so comparing them before deciding is essential. For example, let's say you invest $10,000 in two different mutual funds. One has an expense ratio of 0.5%, while the other has an expense ratio of 1.5%. Over 20 years, the fund with the lower expense ratio would cost you $2,893 in fees, while the fund with the higher expense ratio would cost you $7,954. That's a huge difference. An advantage of investing in mutual funds and ETFs is diversifying your portfolio. Both mutual funds and ETFs hold a basket of different stocks or bonds, which helps spread the risk. Investing in diverse assets can help protect your portfolio from sudden drops in any stock or industry. Let's discuss how and how much to invest in mutual funds and ETFs. The initial step is researching and identifying a mutual fund matching your investment objectives and risk tolerance. One way to accomplish this is by using a screening tool on a financial website or consulting a financial advisor. After selecting a fund, you must decide how much money you wish to invest. For instance, suppose you wish to invest $5,000 in a mutual fund with an expense ratio of 1%. That means you'll pay $50 annually in fees. If the fund returns 8% annually, your $5,000 investment will grow to $5,400. However, after deducting the $50 fee, your net return would be $350. Remember that these are just hypothetical numbers, and actual returns may vary. When investing in ETFs, you'll also need to consider the bid-ask spread. The bid-ask spread represents the difference between the highest price an ETF buyer is willing to pay and the lowest price a seller is willing to accept. This can impact your returns, especially if you're frequently trading. Consider investing in ETFs with high trading volumes to minimize the impact of bid-ask spreads. Another factor to consider when investing in mutual funds and ETFs is taxes. You may owe taxes on your gains depending on your account type. For example, suppose you have a taxable brokerage account. In that case, you'll owe capital gains taxes on any profits you make when you sell your shares. To minimize your tax liability, consider investing in tax-efficient funds or using tax-advantaged accounts. In conclusion, mutual funds and ETFs are excellent ways to build a diversified portfolio with relatively low fees. By researching, selecting funds that align with your investment goals, and monitoring your expenses and taxes, you can set yourself up for long-term success in the stock market. Thanks for watching. If you enjoyed this video, please like it and subscribe to our channel.